Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and it's after many weeks, if you will, or maybe there is a week in between, but we have a one full week of trade. We don't have a holiday in between, and that's interesting. So 5 full days of trade. It's also the expiry week, so it will be that much more volatile, if you will. And the global cues are well reasonably positive, if you will. I think the only pickle when I look at all the global websites, the only pickle seems to be the COVID situation in India. I'm hopeful that this will ease. Just before we get into trade full stream, just an inherent belief. We've seen this happen in a cyclical way in UK in December, Jan, wherein the situation was very bad there. It happened in US in April and May last year. We're going through a really tough time right now. This too shall pass. Let's keep that faith. What did the US markets do in Friday's session? Let's get back to trade now. And I think they were doing okay. So about 1% higher for most of the key indices. So the green was there on the screen for US. Asia doesn't have as strong a green, you would have to admit. So almost all the Asian indices, the mainland Asian indices as well as the peripheral ones, have slight tinges of green. There could be an odd index or two here and there, which is maybe in the red. Otherwise, there is a tinge of green there. But it's not a very dark green, if you will. So the gains are not very pronounced. But for India, the SGX Nifty shows that the start could well be positive. So about close to 1% or thereabouts is what the SGX indicates. Let's wait and watch how this shapes up at the start of the trading day. Could this be led by banks? That's the key thing that we have to ask. Anyways, I'll get to that. What this week is interesting, aside of the expiry, of course, which is more domestic in nature, the FMC meet is there. Wednesday, it will conclude. And I dare say the FMC meet could be a bit of a non-event because, frankly, we know that Jerome Powell and team are going to reiterate that they are not taking their foot off the pedal. Now, maybe that's why the economic data that comes out of US during the week might be more important because the markets in its wisdom would want to believe that, if the economic data is looking so strong, is the Fed behind the curve, etc., etc. I really doubt. Expert after expert has come and said that don't panic too much with it. Having said that, the market has one of its own. But the long point that I'm trying to make, the short point that I'm trying to make is the FMC meet may be a non-event, but it's an important one to watch out for this week. Now, what to do in a scenario like this? What's the trade setup looking like? While the index will probably start off well today, there's this beautiful chart in a story that is there on the BloombergQuint website. You can go and read this. This is a story this is the column by C.K. Narayan. And he writes and shows how beautifully, if you look at the last few weeks, that there is a big underperformance of the Nifty versus the mid and small cap indices. The relative strength comparative chart shows that over a period now, the mid caps and the small caps are outperforming the large caps by a margin. And maybe, just maybe, the action may actually be at the broader end of the spectrum. So we want the Nifty to go from 14,500 to 15,000. That may not really matter too much. What may matter is that you probably need to look beyond the biggies. I think he's put it up really well. But the long and short of it is, I firmly believe that the action is actually in the mid caps and the small caps. Having said that, the 2 or 3 pockets that one should watch out for. Everybody's been hoping for big tech to bounce. Now, there could be a bounce back move, short covering led, etc. There is Tech Mahindra results to come out tomorrow or today, I think, and HCL Tech numbers, the markets will react to it slightly negatively, I would reckon. But even if there is a bit of a bounce in the lead up to the expiry, because people may want to cover some of the short positions in order to make the profits, I doubt that there will be a significant traction there in big technology. I think there could be some bit of weakness in rural focus NBFCs and some other specific pockets like tractors, etc. So that is something that all of us should keep an eye out for. And there are a bunch of earnings coming out today, 2 Nifty names, HDFC Life as well as Tech Mahindra. So eyes out for both of these. HDFC Life is expected to be a very strong set of numbers. So it'll be interesting. And from Tech Mahindra's end, the commentary of what will happen because of the 5G spending, etc., and the traction that they get there would be important. The broader end of the spectrum, there are 2 or 3 mid-sized names which are interesting. SBI Cards and Payments, with whatever is HDFC Bank's loss on the credit card side is ICICI Bank and SBI Cards gain, and one would presume. So let's wait and watch what happens there. Even American Express, by the way, they've been barred too. And Snowman Logistics, by virtue of the questions will be asked to them about the tie-ups that they are doing with pharma companies for transport of vaccination and how strong could that look in April to June quarter. So I think that's a very important set of numbers and commentary that all of us should watch out for. in terms of numbers or stocks that will react today, well, the two large caps, and for obvious reasons, both of these are in focus. Let's start off with HCL Tech. We can start with HCL Tech. So there was a miss on EBIT and PAT, which is likely to weigh on an already weak performance. So yes, the stock has corrected quite a bit. Yes, brokerages are bullish, most of them, but I still think that there could be a flash reaction. Even actually the market is doing well, so that may be contained a bit, but watch out for that. I think what helps HCL Tech is new large deal wins and all-time high new deal total contract value, which will support downsides, and valuations will support downsides. I think at current prices, and if it opens lower than even more, it's trading at slightly less than 16 times FY23 EPS. I think that would make it one of the cheapest, if not the cheapest, large cap IT stock. And therefore, there's a valuation comfort out there for HCL Tech. But I think they need to deliver a little bit on Q1, Q2 numbers, and then you might see some traction there. The management will speak to us at 9:30 today, so you may log in and try and hear the commentary, or you can hear it anytime during the day. It will be there on all our platforms, including our website, if you want to hear HCL Tech. I think the man of the match today, for the right reasons, could be ICICI Bank. Splendid outperformance. Yes, the street knew, the whisper number on the street was high, but just look at this. The asset quality improved. Higher provisioning is positive, right? Because you're saying that the bank is actually counting for FY22 slippages that may come. I think there were growth trends in both SME, which was up 33% YOY, and business banking, 41% YOY. Both of which remain strong. And ROEs are looking up. I think the street is very likely to upgrade the earnings estimates for FY22 and 23 as the quarters go by. So you got to watch out for this. I think this remains firmly in focus as the bank to watch out for. If it used to be HDFC Bank as the bank to watch out for, I think the mantle might just shift to ICICI Bank as the bank to watch out for. Now, CLSA, of course, says that this is the large cap stock to monitor. They maintain the buy rating and a target price of 825. They believe they of course increase the earnings estimates, by the way, by 4 to 6%, factoring in better growth and NII. And they believe that the bank's re-rating cycle could continue. So think about this, viewers. There'll be EPS upgrades at one end, and then there will be multiple upgrades. The P multiples or the price to book multiples will move up. So therefore, ICICI Bank is in a sweet spot, not just for today. Now, I'm not advocating go out and buy it today. It may well start a gap up. It may well come off after that as well. I have no idea about that. But I believe that the medium-term trajectory for ICICI Bank looks strong because of an earnings upgrade cycle and a P price to book multiple cycle. Sorry. So do watch out for ICICI Bank in the session today. In the same breath, since we're talking about financiers, do watch out for M&M Financial in the session today. I think there is a bit of a pickle there. Now, what's happened, and if you just look at M&M Financial's results very, very closely, you see a couple of things. The Q4 PAT missed estimates because there's a spike in provisions. Unfortunately, unlike ICICI Bank, which was a prudent provisioning, this provision spike was led by write-offs in Q4. The NPA levels are sustained at 9%. Now think about this. The average for M&M Financial is 8.5% for the past 8 quarters. The last 4.5 years, their average NPA levels is 9.2%. This is from, I think, a Dolat Capital note which noticed this. And these are, sustained, right? This is not just happening one-off, and that's the problem. The write-offs have climbed to 5% in FY21 versus 1% FY19. And then the management came out, and I think in a couple of things that they've said disclosures, they said that the 19% of the morat availed customer contracts are exhibiting no collections versus 6% earlier. So the collections are not coming in from customers who had availed of morat, and the ground pulse of the last 20 days suggests very subdued customer and employee sentiments. Viewers, this is why I was saying that the rural-focused NBFCs and some of the other spaces might have issues, because COVID wave 2 is impacting rural India. And therefore, you've got to be wary of pockets which gain from rural India, because it's not necessary that the things would be the same this time around. So keep that in mind. Watch out for M&M Financial today. Watch out for Indiabulls Real Estate. Optically fairly strong numbers. Revenues were up. Net profit versus a net loss, and EBITDA of 145 crores. So all of which look very, very strong. And lastly, viewers, there are 3 OFS which are offer for sales which are happening today. Hathway, Shalby, and Federal Mogul. And in both the case of Shalby and Federal Mogul, the floor price is lower than the current price. Now, the reason why I'm making this point out here, that if you look at the last instance of the WAPCO OFS, people who thought they were smart shorted the stock, believing that they will take the stock in the OFS, offer for sale price, and then kind of fulfill for it. And there was a bout of short covering, which actually led to a lot of people making extreme losses. So if you are not at top of the game, and if you're an average retail investor, an average market observer like I am, you may not want to take the high risk game of going short on the stock and thinking that you will buy it off in the OFS scheme, even though, I mean, because the floor price is lower, that game may not necessarily work out. So please be mindful of that. That's the limited point I'm making. Federal Morgan may start off lower and you may want to buy it at those levels, sure, if you like the company. So that may not be a bad ploy if you understand the company inherently. But going short on the stock because you think that you will buy it in the OFS at some point of time and all of that, it's a risky game to play. So just be careful about that. All in all, a number of stocks that will react on open today. Watch out for ICICI Bank. I think it'll start off higher. I think part of the reason why the Nifty and the SGX Nifty are also indicating some gains might be because of ICICI Bank. I think it will have strong traction today. It may spill over to names like SBI Bank too, SBI too, by the way. Let's see what happens to some of the other private banks. And I just be mindful of big tech. I think there has been a bit of a sell-off already. And after this disappointment from HCL Tech is digested, there might be a bout of covering that might come in for the current series. I doubt that too many people will roll over short positions because tech is very resilient in normal circumstances. So just be mindful of that. It may not be a prudent idea to go short on an HCL Tech if it opens gap down, simply because the stock has already corrected quite a bit. So please be mindful of that. Infi, HCL Tech, all of them have corrected quite a bit, and therefore a short idea may not be a great idea. But lots of stocks to react. The last point that I want to make to all of us, we will get through this, but we need all of us to participate in this. So please mask up, stay masked up if you step outside. That's the quickest way. And please get vaccinated. We don't fear crowds, etc. When the drives open up for all of us who are sub 45, it will be prudent for us to get vaccinated and stay masked up. Thanks so much for tuning in today. Have a safe day.